This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. I'm going to be covering the datasets, the earnings, SPY technical analysis, and our lovely VIX and Vol ramping for August 1st, 2025. And with that said, let's go ahead and jump straight into the data. Alright, and the data today was fairly bearish, but we did see a little decrease in the jobless claims. I discussed this as long as we stay below that 2 million mark in the continued jobless claims, it's going to remain decent for the market and the economy. That 2 million mark is really the key area. Now, we talked about the PCE prices. We did have an expectation that they were going to rise, or, not the PCE prices, the PCE personal consumption. Pretty much we saw that across the board. All the data prints came in pretty hot, but within expectations. I think they were just slightly above expectations across the board. The Chicago PMI is showing producer manager index is rising, so that's suggesting that producers are still continuing to raise their prices. I can't talk today, but you all understand. Oh, I do these with love. That's all that matters. Okay, so the Atlanta Fed GDP came in lower, actually by quite a bit. The last print was 2.9%. The two prints before that were 2.6%, and then it was 2.4, 2.4, something like that. So having it come back down to 2.3% kind of puts it in line with what we're expecting. We've been seeing weakness through the Fed GDP and just the GDP numbers overall. So with that said, let's go ahead and jump into tomorrow's data. Now, this is very squished on the screen, and I apologize, but there is kind of a lot of data tomorrow, but let's really just break it down to what's important. So 8:30 a.m., we have all the NFP, that's the non-farm payrolls, the unemployment rate. That's all very key data. You want to be looking at how TLT is reacting, how HIG's reacting, and how the VIX is reacting. Once those data sets come out, you want to be seeing how the treasuries are, are they moving upward or are they moving downward? That's going to be your biggest indicator of what we're expecting out of those data sets. Now, we are expecting a higher unemployment rate tomorrow. That is a cool data set for the market, so just be aware of that. That is leaning towards a rate cut rather than a rate pause. So if we do get in the 4.2%, that is technically bullish for the market right now. So just be aware of that. Now, the non-farm payrolls and everything, we should be seeing an uptick in those. They're expecting a slight downtick in just the standard NFPs, but I don't think that's going to be correct. Participation rate, I don't really care about. Okay, so 9:45, 15 minutes after open. So basically the 8:30 pre-market data, and then you have the data coming out right after open, which is 9:45 a.m. and 10 a.m. That's the ISM manufacturing data, so it's important. I don't think it's going to move the market as much as the pre-market data will. It's just not as important. Now, the one thing that is important is the consumer sentiment. They're expecting that to be in line. I agree with that. I don't really expect any difference too much. Now, that's the real data set that will swing the market at 10 a.m. if there's any of these data sets that are going to swing the market price. Fed GDP now, again, we just saw a downtick in that, so we're very likely going to be expecting a downtick in the GDP. Anything else I'm missing in here? Nope. Okay, so basically it's going to be the pre-market that's going to be important. They might do some little bit of volatility around 10 a.m., but other than that, it should be a fairly straightforward day. Just paying attention to the gamma levels, the delta levels, and things like that. Now, we did have some important earnings. We did have Amazon and Apple and Coin. Let me just check what everything's doing really quick. I know that Apple was up, I believe, 3% in the after hours. Okay, so Apple's up 2.5 or 2.4% right now. We have Coin down, geez, 9%. And we have Amazon, I believe it's down 3%, but let me just double check. It's down 6.5%. So, very, very bearish earnings out of Coin and Amazon. Those are going to weigh very, very heavily on the market. Now, let's check Master because I'm assuming MicroStrategy is going to be following suit. Yeah, and MicroStrategy is down 1.5%. So, Bitcoin holders are taking a hit. That's likely going to work its way across the whole market because pretty much everybody's worked or invested into Bitcoin in some way or form right now. So that Bitcoin downturn will be taking its place, or will be hitting the market a little bit. Now, with Amazon sinking pretty drastically, that's going to be a major weight on the S&P itself and on QQQ. So just be aware of that. Now, we do have Apple doing well, but it's not doing enough to completely outweigh everything else. So yeah, just be aware of that. Tomorrow or today, whenever you're listening to this, is a little contentious. We did have some pretty massive bullish or bearish earnings coming in on Thursday. And before we get into the technical analysis, I just want to kind of quickly cover over next week. So I did peek at the data for next week, and I did peek over the earnings. There's a few key earnings, but nothing major like this week. The most major earning next week, I believe, is Palantir in Monday pre-market. Other than that, it's really not a big week. It's a very big week for quantum, but not for the overall of tech. And the actual data sets we have is not super, super important. I believe it's the ISM non-manufacturing data. So that's really not key data. So very likely, if this selling continues, we are very likely going to see a continuation of it. Now, one thing I just wanted to bring up is that technically today is July 31st. It is the end of the month. This is the time that literally every single fund, hedge fund, is balancing their books. So it's a perfect time to sell off at the end of the month. And with tomorrow being August 1st, potentially we could see a ton of brand new money flowing right back into the market. So don't get too bearish yet. Doesn't matter what the rest of the technicals say. Just understand that there is in accordance with dates, and we do have to be careful of that. Generally, every single fund is trying to bounce around the 15th of the month, or at least considering what their balance is for the rest of the month. Now, obviously, that can change. A lot can happen within 2 to 3 weeks of time. So perhaps we see a continuation within the balance. Now, the reason why I've been really hammering this balancing point out is because we're seeing the treasuries and TLT move upward on basically hot data prints. And we're seeing tech really just dump down while treasuries are picking up that same weight. So what that is telling me is that the equity side for probably the vast majority of these funds are going to be overweight. That means that they're going to have to be cutting a lot of their equities, literally hundreds of billions of dollars of equities, and pushing that weight into treasuries, whether they like it or not. That's just how the funds balance. And that's based on a 50-50 weight. That's not based on a 80-30 weight or, an 80-20 weight or 70-30 weight. That's based purely on a 50-50 weight. Now, if any of these long-term funds decide to swap over to the next maturity, so for example, if a 50-50 weight decides to swap to a 70-30 weight, that means they have to sell hundreds of billions of dollars of stocks in order to do so. So I just want to throw this kind of out there that I do believe this is starting. I do believe we are going to see this process either happen very, very quickly, or it's going to be a continuation throughout the whole of August and September. We will see on your next episode of the market. So, if you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the technical analysis, as always, let's go ahead and pull up our daily time frame and our moving averages. I'm going to hide the prices. Do you like the prices up there? We'll keep them up there right now. Okay, so we had a nice selling day for once, and we actually saw people pressing the sell button. So that was a great thing. The market closed at 632.08, and the 5-MA is at 635.17. So we're a whole $3 below that range, and seeing how the overnight is still trying to push downward slightly towards that 630 range, it's very, very likely we see the 5-MA opening very close to the 633. It can open slightly higher, slightly lower. Just make sure you mark it down if you're going to be actively day trading tomorrow. It's a very, very key level here, okay? With that said, that means that the upper bounds of the 5-MA is going to be around this 535 range, with the lower bounds being around the 531 range. With that said, that also means that we're starting to have the 5-MA and the 10-MA consolidate again. As you can see the 5-MA pulling into the 10-MA while we're seeing the 10-MA pull upward. Now, I'm not too concerned about this 10-MA level right now, but it's still important because it's kind of the segue between the 5-MA and the 10 or the 20-MA. Our 20-MA currently is at 628.44, so that brings the upper bounds of the 20-MA all the way to the 630.50. And as you can see right now, we're technically very, very close to that range. It's very, very possible we test that tomorrow. So with the upper bounds being at the 630.50 range, that means the lower bounds of the 20-MA is at the 626.30 range. So quite a large number on the day tomorrow. We could potentially go all the way back up to 635 or head all the way down to 626, depending on which moving average the market wants to take. So we are between the two moving averages. We did test the 5-MA. We have not tested the 20-MA in an extremely long time, and I mean to have the 5-MA pull through and test that. It's very due. It's something we've been looking for. We've been looking for bear structure up here for quite a while. We're finally starting to see it. We're finally starting to see some of the selling. So I do think we are starting to, receive our 20-MA move. Now, one thing we do have to consider is that when we were originally starting to short this, the 20-MA was back at the 590, I want to say the 596 range, give or take. That's pulled up a whole $20, okay? I still think we will be selling below the 20-MA here, just because of how tightly we've been compressing this rally, and just I can't talk. Due to the fact we have not had a 5-MA test go through the 20-MA in over 3 months now. It's slowly working on 4 months if we don't see this happen very soon. And what this alludes to is this very large cup. I'm going to turn off the moving averages and the Bollinger Bands for a second so that I can turn on the drawings. But this very large cup needs a handle, and it's extremely likely we're going to start forming this handle in here. Now, this blue line, don't pay attention too much. It's just a consolidation line for my own purpose, but this is slowly turning into a selling channel. And that does mean that we have quite a lot of room downward. Now, within our moving averages and our Bollinger Bands, it doesn't show that we have a lot of room downward. But you have to remember, as we start pulling the 5-MA down, as we start pulling the 20-MA downward, the lower Bollinger is going to open up very, very quickly. this is kind of an example in this range back when we started the the major correction, is even when we got to this point right here, you could see how the Bollinger Bands were really, really closing up, and then all of a sudden it just opens. Now that did take some major downside selling. I'm not saying we're going to get that exact same move. However, if we do start pushing down to this lower Bollinger here, that's going to open up our moving averages and open up our lower Bollinger massively. So just be prepared for that. I do think that is coming. We've been seeing very, very, very heavy consolidation within this push, and I've been kind of hammering this point for weeks now, but we've been very, very extended throughout tech, and just seeing Microsoft and Meta, we are beyond overextended at this point. So the sell-off is, it's due. Whether it's just a 20 MA support sell-off or whether it's going to head all the way down to the lower Bollinger, we do have to wait for that. Now, I do want to let you know that say they test the 20 MA tomorrow, I will not consider that a full 20 MA test. From this range, we are looking for the 5 MA to cross over the 20 MA. The reason why we're looking for that is, again, we have not had that happen on the downside since March 25th. Okay, and then the last time the 5 MA crossed through the 20 MA on the upside was, again, April 25th. So it's been months and months and months since we've actually had a downside test, and it's very due. That's just how the market works. You can check back to literally any chart. That's just how the market functions. So what we need to be aware of is that this test can either pull down towards the 620 range and then start heading back up again, or this can get very bearish and we can start really pushing down, push into this lower Bollinger, start building support on the downside, and start moving from there. So that's kind of what we're in the in-between right now. Okay, we're in the crux between all of that happening. Now, let's go ahead and hide the Bollinger Bands and everything. And I just want to look at the structure. Now, on the hourly chart, we've been looking for bear structure for literally days and days and days. And here's that inverse cup and handle / double top we talked about in last night's video. We said that once it hits this top line, if it breaks through and we see follow up through that, then we're likely going to see a handle downward as this would turn into a bullish cup. Now, we talked about what this can turn into is that if we don't start seeing bullish structure in here, if we see this pull all the way down, that invalidates that bullish cup entirely. So that bullish cup has now been invalidated, and now we're playing with this very, very, very bearish inverse cup and handle. It doesn't look like an inverse cup and handle. We're just going to call it a double top because people will give me less crap if I do that. So it is a double top. Okay, as you can see, there's the two tops. Now, what does this lead into? Now, again, we've talked about these gaps all week. This was our first gap, which we went almost to the exact bottom of that. We went almost to this exact bottom of the gap there. I'm going to highlight this in red, as I usually do. And our next gap, goes from here all the way to here to the 626. Well, what coincides with the 626? The 20 MA. That's right, the lower bounds of the 20 MA is what coincides with this level. We are technically within the very top of this range, which means that in all technicals, we can push to the very bottom of this range now. We can finish out this very large inverse cup, and we can continue building structure to continue downward if that's the trajectory that we're going to head. Nothing about this structure for me right now says there's upside. What would take upside is for major invalidations of this double top and for this entire selling right here to be filled back up. And I mean like the entire side of that selling to be filled back up and over at least 2 sessions. If that doesn't happen, then I would still be looking very, very deeply into this downside, as there is massive downside. They have built a very, very, very strong consolidation channel in here, and they have huge liquidity for a major head and shoulders. So that's what I'm looking for right now. Doesn't mean that's obviously what's going to play out, but that's kind of both the bearish and the bullish scenario. We had our major bullish scenario breakout. It was invalidated with the cup being invalidated, and now we're playing into the bearish structure. We just need to see continuation of this bearish structure and continuation of taking these gaps. If we do see that, then, we can look forward to this right shoulder building out and continuing downward. Now, I know everybody's going to be asking me this question, so yes, I will go over it in this video. If we see a full 20-month test tomorrow, no, I will not be selling my positions. I will only be selling my long positions if we see the 5-month crossing through the 20-month. For me, that's my signal. That's my signal telling me that that's a true 20-month test. If they want upside from that, they can, but that's my range to entirely reposition. That's the plan. That's what I'll be doing. I'll be holding some runners from that range, but I'm really looking for a very deep support test here. Is that risky? Potentially. Do I suggest it? Not for everybody. I do suggest most people try to take profits once we get to the 20-month and try to reposition from there. And if we are going to get more downside, if we do see the 5-month pulling down underneath the 20-month, then what does that mean? That means that the 5-month is trading underneath the 20-month for at least 5 sessions. So if there's downside, we're going to get it. If there's not, then, take the profit while it's here. Let's not be hanging on to this for too long if, this is a market that wants to truly head up. I don't think that's the case. I do think that we're entering one of the most bearish seasons. I see a ton of reasons for a major sell-off, and, I'm going to try to capitalize on that as best as possible. This isn't the range to be shaken out. I really don't think the 21 range is the range to be shaken out either, but that's entirely up to you. Remember, this is your portfolio. This is your future. If you're up potentially hundreds or thousands of dollars, don't risk it. Take the profit, and we will always have another play available. We'll always have another good trade available. Just get to that next trade. That's what's important. Surviving to that next trade. So yeah, that's kind of what I wanted to go over. I want to quickly talk about the VIX. We are starting to see some of this bullish structure. We saw that cup, as I talked about last night, that if we are going to see some upward structure, we want to see this cup finish out. We want to see a handle from that, and we want to see some actual upside. We want to see some actual people pressing the sell button. And we actually saw that today. We actually saw people pressing the sell button. We saw the VIX volatility holding at the 98, which for me, that's the level that's telling people that, okay, people are aware that there's actually selling going on and they need to be prepared for potentially a major sell-off. If we see continuation in the VIX volatility from this 98 range all the way up to the 116 plus, that's just going to further confirm that, okay? Now, on the VIX, and I'm going to highlight UVIX for a moment, okay? Everybody has been stressed out about this. Now, let me tell you, I'm looking for this gap right here, okay? From that gap right there, let's do a horizontal ray. That's my profit. Okay, that's going to be like my worst case scenario type profit on this play. I know that people are stressed out, but remember, this is an equity. You can hold it as long as you want. Now, I know people are going to sit there and say, oh, ETFs have decay, blah, blah, blah. Please look it up. That's not how the decay works. The decay works through the dividend. This is not decaying at some crazy speed. Okay, you're having a very, very, very slight decay over a long period of time, almost like an option would. And this is even less than what an option would give you in terms of decay. We're not playing to hold this forever. We're playing to hold this through an extreme volatile moment in the market where this is essentially squeezing upward. Okay. This is the type of trade where you spend, $50,000, $100,000, and you pull $250,000, $500,000 out of it. I can't really describe that any more than that. We're entering the volatility cycle. This is the bottom of the bottom. I mean, look at this chart. This was when we had our last reverse split. Okay, so understand that a lot of this action is reverse split action, but it's still holding a straight line if we weren't to factor in the reverse splits. Okay, this is a cyclical pop, so it pops up, goes down, pops up, goes down, and eventually it will do a reverse split. Eventually these shares will go down to $1 or whatever, and they will have to do a reverse split, but we're not there yet. We are literally $15 away from that range, and we are not going to see another $15 of pushing volatility down on the upside. So that's the long-term thesis, is that this is a very, very, very great trade to take right now. During one of the most bearish seasons, during some of the most lowest pricing on the VIX you can get, I like it. I think it's a great trade. I'm very excited about it. So my price target, again, it's at that tiny little yellow right there. The upside is massive compared to that. Okay, this is just to secure profit for clients. This isn't even to get the squeeze value out of the volatility. So I'm really looking forward to this being a massive trade. But please don't be like blowing your whole account going into UVIX assuming this is going to be some massive trade. There's always risk on both sides. Can the market continue going up for all we know? Absolutely. They can continue building support on the 5 mile and 20 mile and continue pushing this thing upward as long as they want. So just be aware of that. But yeah, with that said, gonna go ahead and end the video here. I hope everyone has had a great trade week this week so far and have a safe trading day tomorrow. Let's end the week on a great note, and I will talk to you in Sunday's video. Take care, everybody.